Revenues came in light again. It feels like deja vu. They missed on top line. It meant they missed on pre-tax profit as well. They made the EPS number due to a one-time tax item.
And buybacks.
Exactly.
Just like they used to do all the time.
Which is like a hitting repeat, exactly, on the last 6 years. Yeah, the challenge is, I mean, I think we all love IBM. We'd all love for this story to turn around. They're such an American icon. The challenge is that, and we're 6 years into this journey. It's been 6 years since they started the turnaround there. The problem is they still, 6 years in, have a major anchor in their portfolio. There's 40% of revenue, at least, that might be being a little generous, punching above weight on profitability, close to 50% of profits. That's in areas of enterprise IT that are in structural decline because of the cloud. This is areas like data center outsourcing, traditional on-premise licensed software, hardware support. And look, they can take actions to slow the declines, to extend the trend, but those areas of enterprise IT aren't coming back. That's displacement by the cloud.
Maybe we should do 6 months. I don't know. Quarters are lumpy. But in the previous quarter, they had 25% growth in mainframes, and they had 1% year over year this quarter. They're saying demand's picking up, but how do you go from 5 to 1?
It's very cyclical. So the mainframe is cyclical for IBM, and believe it or not, 40, 50 years later, the mainframe still matters a lot to this company. And it's cyclical. They release a new one every 9 or 10 quarters. Okay. And so the last release was, this quarter last year. So they've now lapped it. So this kind of hope that we've seen out of IBM for the last few quarters has actually largely been driven by that cycle. They had a really strong mainframe cycle this time around, and now as soon as we lap it, it's sort of,
Meaning you're not going to see strong growth for another 4 to 5 quarters?
Exactly.
Talking about that same cycle?
That's exactly right. And that was consistent with commentary out of management yesterday on the call, which is that if we're looking out kind of early peak out into 2019, we're now facing 3 more quarters of lapping the strong growth in the mainframe, which is a couple of point headwind to the top line. And then in addition, they have FX, and then the real weak spot, or surprise weak spot, which is what's taking the stock down, was in the software business. That's the one that was down 6%. The software business, it's only 25% of revenue, but it's 50% of profit.
Watson, too. Watson and all the sexy stuff was down 6%.
Exactly. So it just illuminates that that Watson, as much as Watson is a terrific initiative and actually gaining a fair bit of momentum, it's just still really small. They just have they're out of balance still, even with all the effort they've put into Watson and AI and blockchain and digital and,
So what's your takeaway on the stock?
Look, I mean, we're sell rated on IBM. I love this company. I wish we weren't negative.
Sell rated. It doesn't sound like that's tough love.
Yeah, but the reality is the time frame to when we could see this thing really turning is long, years. We'd love, 6 years in, we'd love this to be next year or, this year. The reality is we're still talking about a significant out of balance in the portfolio. That's the time frame of burning through the piece of their revenue and profit that's in structural decline is measured in years. I mean, we're talking 3, 4 years.
60% of the revenue outside the U.S., so you mentioned FX. That's not going to... Dollar's getting stronger.
Yeah.
Not going to help.
Yeah, no.